If you don't mind, I want to start with those comments from the head of PIMCO, saying that these private investments, they haven't really been tested by a downturn. And again, I want to point out, you were founded in 2008, right in the middle of the great financial crisis.
Yeah, well, look, I think he has a point in the sense that the industry has grown a lot in the last 15 years, 16 years. There's a lot of assets now in alternatives. And the good news is the industry now is much more institutionalized. There are GPs of all different forms that owns different type of assets. I think most of those GPs are professionally managing these private assets in a very professional way, with process for value creation, with process for reporting. At the same time, at this size, there hasn't been really a very significant crisis industry in the last 10 years. So, he's raising a good point.
All right, so you're saying it's a valid point. I do want to talk to you. If we do see an economic downturn or just some rockiness when it comes to the economy, are there parts of alts that benefit more? I would think, and correct me if I'm wrong, I think private credit may actually see a boom in that kind of environment because big lenders may be more hesitant to lend, and the terms in private credit are very favorable to the lender.
Yeah, private credit, to your point, has more downside protection and maybe can sustain more an economic crisis. It also depends on the sector. We focus on technology. Technology is probably more also uncorrelated to macro volatility just because you're driving secular trends. So I think it depends on the asset. To me, the biggest issue about accessing this type of market, that if you look back 15, 20 years, the industry has evolved so that institutional investors used to have access. Then you expanded that to other forms of investors. Then you got high net worth that started to invest in the industry. Now maybe access for 401ks. To put numbers in perspective, today the industry, private equity in the U.S. is 3 to 4 trillion. There's around 8 to 10 trillion in 401ks. Mm-hmm. So getting access to that pool of capital is pretty relevant, in particular for the large asset managers. So to me, it's a natural evolution. The key issue, more than macroeconomic volatility in my mind, is more liquidity. Alternatives is an illiquid industry. Right. We all own illiquid assets. These assets have longer duration. It's not easy to give liquidity when people need liquidity. So I think matching the liquidity horizon of investors with the assets, it's very important.
I think that leads me to my next question. By the way, some of your past and current investments include Vacasa, a company we've had on here, Ambarella, and also GoPro. So those just kind of give people a sense of the companies you invest in. Are alternative investments right for 401ks? Are they right for just regular accredited investors, because you have to be an accredited investor, but generally retail investors?
I think it's right depending on the profile and depending on the percentage of exposure.
That's an easy answer, though. That's an easy answer. But let me ask you, what's the profile that it's 100% right for, is close to 100%? Because it's easy to say it's good for some people and not good for others.
Well, let me give you the good case. If you look at in technology, my sector, if you look at the public markets, there are approximately 700 public companies. Mm-hmm. Okay, 100 of them are software companies. I mostly do software-enabled companies. So 700 companies in total, 100. By the way, of the 700 companies, 20 trillion of 30 trillion in value, 20 of 30 are 7 companies, a magnificent 7. That's a number of companies. When then I look at my private markets target market in technology, my target market is 20,000 companies. So we're talking about 700 over 20,000. Right. So if you're not investing in private markets, you're not really accessing the broader long-tail part of the market.
I'm going to let you off, though. You didn't really say who it's mostly right for, but I understand your point. There's a lot more opportunities out there and other companies you can invest in.
Exactly.
Francisco Alvarez-Demalde, great to have you here. Thank you very much. Come back and join us.
Thank you, Frank.
All right, good to see you.